emotional trading slash investing is not the way to go. So every time I invest, I make sure that I have a framework strategy to make sure that any stock position cannot go beyond 10% of my portfolio and things like that. I went from a trader, unsuccessful trader, to become like a value investor. From value investor, I again pivoted to quality investor. So right now my portfolio is split into two. One is Singapore stocks, which are more value focused, and the other half are US stocks. It takes a lot of courage to go that contrarian, but I found success so far. I'm able to pick them first, as in invest myself first, before the analysts start to take notice. You go for something you understand first.
What is your portfolio size now? Welcome back to Chills with TFC. I'm your host Reggie, aka your Chief Financial Coconut, and today we are in studio with one of the SGX trainer, right? Right, yeah, trainer, right?
Yeah, SGX Academy speaker.
Yeah, okay. How many of you guys are around?
If you look at the website, we have quite a lot of us.
Quite a few.
I think almost 30 to 40 of us.
Yeah. But you're the only one that I asked.
Thank you.
Yeah. So I've met James at quite a few of the events. I think the vibe is good, and he's quite famously written smallcapasia.com, right? So that's like his thing. So I have been quite curious about this small cap thing, and that's why I wanted him to come on the show, because small cap doesn't sound very good.
I get that a lot of times.
Yeah. So I want to know his story, and also understand a little bit about the small cap environment in SGX. So we are here today with James Yeo.
Yeah, thank you. Thank you for having me.
Of course. For our audience that don't know you, can you introduce yourself?
Hi everyone, I'm James Yeo. Okay, so maybe just to share a bit about how I got started in investing. If you all have recall, right, in the past there's one website called Motley Fool Singapore.
Oh my god.
Fool.sg.
So long ago.
Yeah, do you remember that?
Yeah, I remember.
Yeah, so I was kind of interested in investing at an early age because my dad used to look at the teletext, in the television, and he always tell me, green means I make money, red means I lose money. And I was like, you can just sit down
teletext
and make money. So following which, right, I was picking up some so-called investing tips from books, from videos and things like that. So when I heard about Motley Fool Singapore coming to Singapore to set up a branch, so I reached out to David. So he's the founder, and Joanna. So I got enrolled as a freelance writer. And back then, I think back then there wasn't a lot of interest in US stocks as per now. So a lot of people still look at Singapore stocks in general. And the traction was very good. And I was tasked to write a multitude of different articles. So be it REITs, blue chip stocks and things like that. But I realized that a lot of interest are more towards the established companies. And then there's a niche that is so-called forgotten in the investment
correctly or
investing space.
Correctly or wrongfully? Wrongfully. Okay. Yeah, go say.
I mean, it's just there isn't much interest per se. So I decided why not I come out with my own website, my own blog, and started writing about small and mid cap stocks in Singapore. So that was what got me started in this entrepreneurship. But then I realized after a long while, right, because there is still not much interest in these small and mid cap stocks, because everyone has the same belief or the myth that small caps are very risky. When you invest, you may lose all your money. Unlike REITs that give you stable dividends, blue chip stocks, at least you know that they will be there. It's not like bankrupt in the next week or something like that. Yeah. So then I started Small Cap Asia from there. And recently I also branched over to investkaki.com, which is my second website that I used to also talk about US stocks and Hong Kong stocks and even cryptocurrencies and things like that.
Give us a bit more color, like how did your investing journey kind of kind of come along, right? Like, okay, like family is one thing, right? And then, there's this cute little like company that is a franchise that came over, that's another thing. But how did it kind of develop?
I think the first few books I've read about investing is one from Adam Cole. So he has this if I remember correctly, it's called Secrets of the Millionaire Investor. So back then, everyone started off like, it's either you are a trader, that means you want to make quick profits, or you're the kind of very conservative, I only invest in T-bills or fixed deposits kind. So I'm the aggressive type, which I only invest. Oh, okay. So back then when I first started, so I got into trading. I want to make quick profits. And then I learned a lot of the strategies from books. So one of it is from Adam Cole. Then I go to the library to borrow other books about trading. Then I thought I'm gonna be a professional trader in time to come, that kind of thing. So in the end, it didn't work out. I made a lot of mistakes along the way.
Like what?
One of my biggest mistake was, I think back then I was trading leverage, CFD and things like that. So I'm actually, to be honest, in hindsight, I'm lucky that I got it all out of the way, when I was still younger. My earnings power wasn't that strong back then, but I lost quite a 5-figure sum. Yeah, so
Back then, what were you making? Like from an income perspective, professionally.
very low lah.
So that is like
Below 5 lah.
and so that is like a big chunk of your
It's definitely
your
a big
investment.
chunk.
So
it's like years of savings, because you when you, let's say when you earn 5K, you don't get to keep 5K. You maybe just save 1-2K, that kind of thing, and then I save up along the years and then make a big mistake like trading leverage, and that was, I mean, also to share that was quite a stupid mistake. So I still recall that I am bullish about a certain stock called JC Penny or something like that. Yeah, it's listed in the US. It's a supermarket operator. What happens was that I read about, I do a lot of research so to speak, and then I realized it's kind of undervalued So back then I was like so confident in my stock picking skills already. So I went in leverage, like the leverage was 1 to 10 times. So at any point in time, if the share price go against you 10%, means it will wipe out your capital. So either you let it wipe out your capital or you pump in more money. So back then I was like, wow, steadfast. This is the stock to go. It's already been down so much. Like you have heard of stories like that. Down 50%, cannot go down anymore. So I bought in again and again. 3 times, I still recall. And then it went down further. So I just wiped out my entire capital. Yeah. It was damn painful. And then I still recall that I was arguing with my girlfriend, now wife.
Oh, respect all these girlfriends and wives. Still stay around.
Still stay around.
Same with Shen Kai, right there. So, the girlfriend become wife. Okay, solid. Yeah.
So I didn't tell her about this mistake until much later on. So, but basically, that lesson that I learned, and all the things come together at once. So basically, it also wiped out my emotions. So from then on, right, I decided like emotional trading or / investing is not the way to go. So every time I invest, I make sure that I have a framework. So I go through my own framework strategy to make sure that, or like for example, one example is like any stock position cannot go beyond 10% of my portfolio and things like that. Yeah, so I really have a lot of guardrails.
Okay. How do you then pick yourself up then? So after that collapse, you got wiped out, then how do you kind of like get your thing together?
Get my groove back.
Yeah.
Yeah, it was then devastating. That was trading, right? So I realized, okay, trading is really like maybe not my cup of tea. And then I realized okay, maybe I need to do even more research. I mean, I didn't wanted to give up. Like, I was still like 20 something, like, if I'm not wrong. So then I realized, cannot be like, there are still so many legendary investors, successful investors like Peter Lynch, like Warren Buffett. What are they doing that I'm not doing? So I start to question myself. And then I went back to even reading more. So I started to pivot on my strategy. Yeah, so I look at maybe value investing. And then after which, just nice, because I'm still continuing to do blogging and everything. So I went from a trader, unsuccessful trader, to become like a value investor. So I started to look at like things like P/E ratio, price to book, valuation point of view lah. And after a while, I realized, because have you heard of the term value trap?
Yeah. So JC Penny is a value trap.
I realized, JC Penny is actually a value trap, because when the market dynamics are going against you and going against the company, um, even if you try, I mean, if the management, they always say, oh, we are picking up.
They will confirm say
yeah,
that. Confirm.
correct.
Yeah. If not, they get fired. So
Yeah.
they have to say
They
it.
have to say
Yes, yeah.
something, and they always downplay the negatives.
Yes, for sure.
Upplay the, the whatever.
So that's the part about being an investor, right? You must sniff the BS.
Correct.
Yeah, you must understand what is true, what is not true, and must get the whiff of things.
You must be on the ground and seeing things like that. Yeah, so from value investor, I again pivoted to quality investor. Quality investor as in, so right now my portfolio is split into two lah, mainly. One is Singapore stocks, which are more value focused, and the other half are US stocks. So US ones, like for example, Alphabet. I look at the quality company and I don't really trade them or look at them very often. So it's more of a long-term buy and hold lah. I look at Alphabet, I like it, I like their business model, economic mode. And when there's a dip, right? Like for example, back then when ChatGPT just came out, everyone said, wow, Google search is gonna die, Google is gonna go down the drain, that kind of thing. So I actually went in. Yeah, so it's very kind of a logical way or systematic when it comes to the quality investing part in the US.
Okay. What is your portfolio size now? Got 7 figure?
Not yet.
But high 6.
Around
mid 6. Okay. That's quite
Judging
a
from the
turnaround
fact,
story.
Judging from the fact that I lost 5
Exactly.
figure.
You lost a big 5 figure, like to turn around to get to a mid 6
Every
figure,
day
right?
eat Instant.
Yeah, actually that was the part that I want to find out a bit more, which is like you change your investment methodology, right? Okay, which I think is quite normal when things are not going so well, right? When things are not going so well, you reevaluate the strategy, you reevaluate the situation. Most people will come to a logical conclusion to change a method, right? Rather than refining that same method. Okay, but neither is superior nor inferior. Ultimately, you find a method that works for you, right? I think that's the main thing. But the reality of the investing is you need to get back the capital to then give it another chance, right? And then roll again. So and of course, then you got to build up your whole palette to try again, right? So can you give me a bit more color on that front? Don't need to cry.
Let's take tissue paper.
But take tissue. What the hell? That's so hard, on the background. Don't need to go there. But I want to hear a bit what do you do to regather your capital and then regather yourself, mentally, emotionally, to then, okay, let's give it another shot.
So after that incident, I mean, I didn't really totally give up on trading lah. To be honest, I still see whether I can do anything with it, because anyway, I still learn about trading for so many years. But then I realized I cannot just do the wrong thing over and over again, like what you said, change strategy and things like that. But what stayed the same is because I'm not really a spendthrift lah. I tend to save quite a lot, because I can, every time I think at work, right, every time people ask me, what do we eat today for lunch? Then I will say, 菜饭 lor, 菜饭 lor.
Oh
Then
my
they
God.
get bored of hearing
Yeah,
me.
the Cai Peng gang.
Yeah, they get bored of hearing. Don't ask James. James very boring. Always 菜饭. It's either 菜饭 or like wanton mee. That kind of like. I'm very okay with kopitiam. So every time, when people talk about retirement, I must go do a lot of fancy things. Only lah, very low. I mean, my expectations are very low because I don't really spend a lot. You give me 3 meals enough already, like kopitiam 3 meals, and then occasional spend traveling and things like that. So I mean the thing that stayed throughout, be it I go from trader to value investor to quality investing, is that I just save lor.
So what is your burn rate a month then? Like on average?
Last time when I was still myself, by myself, I don't have my 2 kids and my wife, I think I can save 40 to 60% of my income. And now things are all going up so high, inflation. Now it's more about trying to earn more rather than use save lah. Yeah, so that's why I also trying different gigs and things like that.
Okay, fair.
Yeah.
Fair, yeah. But that's the reality, right? That's the reality.
Yeah.
When you're alone, you have all the control over your lives. You can make all the decisions. But when you are, with somebody or in a family structure, then your considerations will vary, and not everything can cut, right?
Yeah,
So
not everything can cut.
it is what it is.
I can cut myself.
Yeah. But it's hard, right?
Yeah,
Yeah,
there's a limit. There's a cap that you can, go down.
yeah.
So instead of like trying to squeeze out every single penny, I go the other way, which is try to get higher income.
Okay. And what's the strategy to get the higher income?
Side hustles.
Okay.
Like what I'm doing for my blogging
with
and
the
things
website
like that.
and everything.
Yeah.
Okay, must check out the website, investkaki.com.
Thank you.
And smallcapasia.com.
Thank you.
Okay. So let's move into the whole like small cap discussion. Like you said, right, there are some from your point of view, it's a myth. To other people may be true.
Yeah.
So I want to hear, what's your take on the small cap ecosystem here in Singapore?
I think to a certain extent it's true lah. It depends on how you look at it first. If you are just looking from the point of like the press, every time you see maybe some ass chip or some takeover that is having a low ball takeover, that kind of news that's being published on the traditional media. You see, small cap stocks again. You see, this is what you get if you invest in small cap stocks. But if you look at the broader picture, right, in SGX itself, there are a few hundred stocks listed. How many of them are REITs and blue chip stocks? I give you STI 30. So you have 30 stocks. And then you add in a few more reputable mid caps, give you up to 100. So we have 700 plus, but we have 100 that are more established kind. Like ST Engineering or SIA, different REITs involved. But you have 600 plus small and mid cap stocks or even penny stocks that are not highlighted enough to all the investors. So that is the pool that I usually
shop
go
around,
and shop around, sift through whether it's real or not, that kind of thing. I don't know if okay, so this is particularly unique to me in the sense that even if you tell a lot of other people that I find a bargain in this certain space, not a lot of people would follow you. It takes a lot of courage to go that contrarian and really invest in that pool of small cap stocks. Yeah, but I found success so far so I just continue.
Okay. Would you say a big part of your turnaround story involves a lot of these
actually, to be
small
honest,
cap?
So back then, because I haven't started investing in US stocks, because maybe I've been writing about so many Singapore stocks from the website foo.sg, and then Yeah, I last time, if I'm not wrong, I churned out over 1,000 articles. During that span of like 3-4 years while they were here. So I have to be like every Singapore stock, I have to be at my fingertip. Like for example, ISO team, what is their business model? Is their revenue increasing, decreasing? What are their growth prospects? So I sort of have to. I'm already on the ground because I'm looking at them day in day out. So whenever something interesting pops up, like this one increased order book, so I will take a look at it again, a deeper look, and see that this one is like a turnaround story, that kind of thing. And while I write about all these stocks, nobody is interested, right? But I will be interested, so I would really do further research and how come nobody is looking at it? Okay, I will buy. And over the years, I realized that I'm able to pick them first, as in invest myself first, before the analysts start to take notice. So analysts typically come in with their reports and everything when there's certain market activity, trading volume. So the big boys are already taking interest in it. So I'm actually one of the few that go in first. So when analysts start to cover, then the share price will go up further because a lot more retail investors will, this one really not bad. And that's where I make like double digits, triple digits.
Hey, welcome to the Financial Coconut Podcast Network. I'm your host, Reggie, aka your Chief Financial Coconut. And if you're loving what we're creating here, like, share, subscribe, share with your loved ones, comment in the comment section below. And yeah, we'll see you for great content on Chills with TFC. Okay. Well, this is not financial advice,
Disclaimer first.
Just to be very clear, this is not financial advice, but can you, out of curiosity, right, share with us some of the interesting names that you've picked up, over the years, over the span of the decade that, allow you to do a turnaround story yourself?
I think there's one that I often share a few years back was iFast. I remembered, I think that was COVID period. So COVID came and iFast share price went down all the way to $1, then to 80 something cents. So back then I was like looking at it, because if you have looked at their website fsm1.com, then you will see that they are like the market leader in terms of distribution of unit trusts, and every overseas fund or like those can't recall the names, but typically when they come in, they need a distributor. So FSM1 is definitely, the Fund Supermart is one of the platform that they go to other than the banks. So I still recall that when I was taking a look at it, the CEO actually came in and scooped up a lot of shares. So insider trades is also something I look at, especially when the share price has come down quite a bit. Yeah. So then I see that, he has came in at 80 something cents or 90 cents and that kind of thing. So I decided to go in at $1. And today I think iFast is trading at $8 plus. I can't recall the price. Yeah, but I sold earlier a bit wasted. I sold at around $4.
Yeah, that's still a 3x.
4x.
That's still a 4x, in the SGX, which is interesting. Okay, great. Can you concur a little bit more as to why you made this decision? And I know you already shared quite a bit, right? Like, okay, because they are a distributor in the game and they're one of the biggest distributors. So every fund that come in, BlackRock, Capital, whatever, also Weird Capital, guy, not weird, all can sponsor one, we're okay. So, yeah, all of those big boys, when they come in, they need a place to go, and Fund Supermart always gets it, right? So that's, and to date, they are a dominant player, right, in the game. And you saw the CEO scoop up. Okay, so that is an insider look at, say, management is committed to this thing, and they believe that at this price is probably below, it's a bargain, below market value, can scoop, right? So is that kind of the basis of your thesis, or are there certain other things? I want to use it as an example for people to, open up
the
their
framework
minds.
lah,
Yeah, the
so to
framework.
speak.
Yeah.
Over the years, I've refined a bit, fine-tuned a bit of my framework as well. So when it comes to Singapore stocks, I use this term called heads you win, tails you don't lose much. So basically, I look for companies that are already trading at so-called cheap valuations, and then further on, I will look at the growth prospects. I will look at whether there are any catalysts. So one is value, the other one is catalyst. So I typically want to look at catalysts from different angles lah. So insider trade is one of them. On top of that, like if there's any increasing order book, revenue or earnings increasing, it's even better if there are multiple catalysts and then it's cheap. So I know that once I go in, because I go in at a cheap valuation, and all these catalysts will, drive up the share price. Yeah. So these are the main two areas I look at. I focus on.
Okay, fair. I get it. I get what you mean. If you have a specific question, put in the comment, or you can read his website. Okay.
Thank you.
Yeah. What are some other interesting?
The other one that I've been sharing for also quite a lot of like workshops is this company called Sim Leisure. SIM. So they are doing the escape theme parks in Malaysia. So and they are also in Kidzania in Singapore.
Kidzania is a great business.
It's a great place. You have all these
I always
kids.
thought it's just a franchise. Never knew it's part of a Lisco.
Yeah. They are actually getting the franchise rights for that Kidzania. So Kidzania, if I'm not wrong, Malaysia one is in KL, and then they have one in Singapore. It's Sentosa, right? Yeah. They actually got the place for very cheap because it was
horribly run.
Oh, you heard about the story?
No, please share.
Yeah. It's actually run by the Malaysia government. I don't know how much I can disclose, but basically
it's public info.
It's public info.
Yeah.
So basically they bought it, if I'm not wrong, at just a few dollars, because they owe a lot of money for that
and there were remaining lease time.
Remaining lease, but they owe a lot of debt. So basically the company, Sim Leisure, just took it over for the cheap and service the debt and everything. So they do some refurbishments and then they launch. And if you look at, because if you look at Klook, all the ticket prices crazy X, and parents still bring their kids there. I mean, if I will also bring my kids there.
See, that's why you cannot save 30%, 40% anymore, right? Yeah.
The ticket prices are like, if I'm not wrong, it's $90 for a pair or for the kid itself, and then the parents still have to top up. Something like that, I can't recall. I'm like, oh, okay, maybe wait until there's discount. CNY discount.
Coming, SG60, something. You want to sponsor us,
Yeah.
Yeah. No, interesting. The entertainment business is a very low capex business.
Yeah. So they are different in a sense when you compare to, Disney. They have a lot of exhibitions as well. They are different in, the theme parks. Disney theme park versus this low maintenance escape theme park. So theirs, they have water slides they have those very, you don't need a lot of fancy equipment and things like that to make it fun. So low capex, they're able to export this model to Saudi Arabia as well. So actually they have successfully export this idea to Saudi Arabia, where they build the theme park over there. Then they get the contract fees and things like that. Yeah, so but that one was one time off so their results actually dropped in the latest quarter.
Okay. Interesting.
Yeah.
Alright, but this one, once again, not financial advice. You got to do your homework, okay? Talk
Not
to your
financial
own
advice.
brokers and all that.
Do your own due
do your own due
diligence.
diligence. Okay. Is there one last one that you don't commonly talk about? Just so
One
I do my
last
job
one,
to pick everything out of you.
ISO team. ISO team. They do all the HDB upgrading, the playground below the void. At the void deck there, the area. So they will do a lot of all these kind of alterations, refurbishments and stuff like that. So this company, I was also looking at it before the election. Yeah. So I know typically, our Jinghu, right? They want to
It's
do
okay, can say
election.
one. It's
Can
okay.
say one.
Yeah, can say, yeah.
Okay. So our government, when it comes to elections, they will pump in a lot of money to give you upgrading estate, you make it feel better. I mean, other than the vouchers lah. So all these, then the contracts will flow to, a pool where they will tender. And ISO team is one of the more, because they are listed lah. So they are like one notch better than the other SMEs, which in terms of quality, in terms of like they are able to fulfill the kind of contracts. And I got in like 1 year plus before the election. So I know like, typically the cycle is gonna come. So I got in. This is one of the catalysts. The other side of things is that it's quite fair cheap in the sense of the PE ratio and the kind of thing. Because their share price actually came down from 20 something cents to around when I got it 4 cents. 4 cents.
That's a crash.
Yeah, that's a crash. Yeah, because contracts dry up lah. There's a angle to it actually. If you really follow through the company, you would know that back then they got a lot of contracts before COVID happened, so they have to fulfill their obligations, and all these contracts, during COVID lockdowns and stuff like that, when they hire all these foreign workers, right? They are not able to really put them to help out in the business. So there are like a lot of restrictions and stuff like that. So their costs overrun. So that's why during the 1 year, 2 years after COVID happened, they are still making losses because they have to fulfill the past contracts. And that is the point where I see, okay, the more or less, I mean, I attended the webinars as well. So as a KOL, they,
Come lah, come.
come
Yeah.
So I attended, then I see, okay, the turnaround is coming. Because they say that most of the legacy contracts are done and dusted. Going forward, we are going to put more attention to the profit margins. So that's where I got interested. Then I see, okay, elections still coming. And then, because they are going to deploy drones as well for the painting of the HDBs. Yeah, so this is another development, or the catalyst and stuff like that. So value catalyst. Yeah.
Fair. Okay, we welcome all these CEOs on the show. We can chat more and take it further. Yeah, but we must also be very candid with our audience that not all small caps are
Correct.
like that, right?
Yeah.
And before that, you were saying that some small caps are a bit 超宽, right? So it's fair, right? Fair statement,
yeah,
right?
yeah.
Do you want to like just highlight and just to be very clear why I wanted to do this? Partly is James, but also partly because there's recently been quite a lot of discussion. Our government is trying to stimulate or grow the Singapore, stock exchange, right?
The
And then there was like,
EQDP program.
for this that for somehow live under the rock and then don't know about this. Do you want to like share a little bit on that?
Okay.
Yeah.
Let me share. MAS has like earmarked $5 billion to be invested in the local market. So right now, 1.1 billion has been allocated to 3 funds, and their mandates are all to invest primarily in Singapore stocks, especially the small and mid cap stocks. Okay, so this is a very positive development. I've been hearing a lot of activities going around. I mean, when I talk to my fellow investing peers, they've been, EQDP is coming. And even when I do LinkedIn posts, a lot of traction. Like people are really interested to find out what is going on. Because free money, man. Coming back to the Cao Kuan part, I've been around and I've heard of all these stories. I believe a lot of Singaporeans would have heard of it if you follow the business news. Typically, what happens is that, when they go for IPOs, Singapore companies go for IPOs, they go for maybe high valuations. And because, there isn't much interest in the local market, and then the share price keep coming down. And most of the tauges, they will be like, why do I still continue to list, in Singapore? I mean, I still have to pay all these different kind of listing fees or have to do IR, so to speak lah. So their idea is just take it private lah. And a lot of times they become like a low ball offer because this is my company ma.
Become a bit pump and dump.
Yeah.
Yeah, like, oh, go out, then decay,
Correct.
then like exit.
And some more like, because some of them are family owned. And you know, I own majority stake. Why would I want to buy at a high price to give you back?
So that's a risk, right? You gotta be aware, right?
Yeah, this is one big risk lah. A lot of investors need to take note, especially when it comes to Singapore stocks as well. I mean, this trend has been ongoing for some time. I'm not saying that it will disappear, but I believe that with all these EQDP, it will maybe have another turnaround as well.
Yeah. I mean, the story goes, if let's say with the institutional these EQDP guys are institutional investors, right? They come in, they may love your company, but they want to take a bigger stake. Maybe not majority stake, they want to take a bigger stake, so they will force you to make changes. Usually that's how it works. They may get a board seat, they want to,
US activists, right?
Like activist investor in the US, right? Say, oh, you must change this, do that, your management need an update, cannot all your own kawan. We need to professionalize the team before we take a 20% stake in the business, right? So I think all that, like what you say, right, is the positive light to see it is that with serious money in the game, it forces the companies to also level up, right? Then it potentially makes SGX more exciting, right? Not that it's not exciting now. It's just like you said, only that at most I give you that 100 company at the top that you really care and all the coverage is there, right? But there are so many that people just, don't think about or talk about. Yeah.
Just undercovered.
Yeah. Okay, fair. If let's say somebody is a aspiring investor, because seasoned investors, they have their own palette, right? Yeah, then you don't really need to work very hard to convince them. Whatever they hear, they aga know already. Then it's like, oh yeah, okay, maybe let me take a look, then they'll make a decision, right? Okay, so those are seasoned investors. But for aspiring investors, still figuring out where they are, what they're doing, and that whole spiel, like you a decade ago, right?
Yeah.
And they listen to this episode and say, wow, small cap, man, small cap. What would you tell them?
I think that's a very good question. I've got that question quite a lot of times from my friends. You go for something you understand first, which is like maybe go for the S&P 500 index, invest in a basket first. And once you are comfortable, maybe your risk tolerance level goes up, and then you start to want to look at certain individual stocks. Then you come to small and mid-cap stocks. Yeah, you don't go the other way around. A lot of people, I think there's one in the forum. They say, I invest in Singtel. That was 3 years back or something like that. So Singtel, the share price didn't do as well. So
until they come on the podcast.
Correct. Very good job.
Yeah, Arthur, a great job.
I've been seeing him in a lot of different podcasts as well.
He's quite active nowadays.
Yeah. So $4 plus came down all the way, to $2 plus, I still remember. And then there's this investor, hey, I invest in Singtel and losing money. What should I do? So I realized a lot of people, when they invest in individual stocks, they haven't done enough homework. So I would suggest that people go for the other way, which is you invest in a basket. So you are diversified. And then you slowly, maybe like for example, when you get bonus, year-end bonus, you have extra money, then okay, I maybe do some research, right? Get into the groove. You do enough homework, you believe in the stock, you understand how this company makes money, then you pump in your money. Then you slowly, and if you see results, then you can take it further. Yeah, so this is actually how I have done it as well. I mean, I have money in robo-advisors and all that. But because I'm really so used to doing all this research when I'm writing articles, I just I have Warren Buffett, they always tell people that, I have I can make decisions in less than 1 minute or something like that, because he already got that filter in his mind. You have to get to that level if you are looking to invest totally in individual stocks.
Okay,
I feel.
Okay, fair. thank you. I think that is a very fair advice. If our audience would like to follow you after today's episode, where's the best place? They can connect?
Investkaki.com.
Okay. So small cat Asia not important anymore.
No. I also cover them in the investkaki.com.
Okay. Great. So thank you for your time.
Thank you, Reggie.
I hope you enjoyed today's episode. If you like what we are doing, head over to thefinancialcoconut.com to put your email address so that we can route out of the algorithm and reach you directly when we need to, right? So when we have events, latest episodes, what's happening, all the good stuff. Okay, so today a lot of things to follow, but yes, follow us first. That's a as a priority. With that, thank you all. We'll see you in next week's episode of Chills with TFC. Meanwhile, take care. Bye-bye.
Thank you. Bye-bye.